Alright, okay, good evening everyone. Okay, so we'll get started for the session over here. So as usual, okay, we'll be jumping straight into the content over here. I'll update you some of the recent trades, right? Right now I don't really have any active trade running. Okay, so I can't update you on the recent trades that we kind of got out. Okay, talk a little bit about the trade review. And then I'll touch a little bit into the pending trade orders, and then we'll walk through very quickly on the market. And then I'll see if you guys have any questions. I'll be able to answer those questions accordingly. Okay. Now, very quickly, just a refresher, right? I think you guys should be aware of it. We do have some news for the week itself. Yesterday we have the U.S. CPI year-on-year. Kind of highlighted, if you manage to trade this, fantastic, right? Very nice little news trade opportunity. We did get the surprise element. Okay, so the market were expecting 2.9. It came out 3.1. So that actually eased off the pressure on the Fed needing to cut rate, or in other words, the Fed wouldn't mind having a higher interest rate environment for a longer period of time. Okay, and we did see the dollar actually strengthen quite a bit post the CPI data, right? And today we have the CPI from the pound side of things, and it came in less than expected. So we did see the pound actually came down. That opens up some opportunity that I'm personally looking at as well, mainly the pound Australia as well as the pound yen. In a while we'll look at the charts, right? But the weak CPI causing the pound to drop actually is great. Okay, it's actually good for us because that, again, as I mentioned, opens up the opportunity that we can look into. Now tomorrow we have the Aussie employment and the labor market data. I don't think you want to be trading that. I don't really like to trade the Asian news, okay, because liquidity is a little bit lower, volatility is usually lower as well. Right. Now, other than that, we do have two upcoming US data. One is the retail sales, one is the PPI. Personally, I don't think it's gonna be like as great an impact as the CPI, right? Again, because inflation data is still the key concern. Then the secondary will be how the economy is performing, which is retail sales and PPI, right? Do keep track, do be aware of it, okay? But since the market has put in a pretty impulsive move yesterday based on the CPI, quite a bit of this major pass unlikely we're gonna get any trade within the remaining 2 days of the week. Okay, so again, that's a little bit on the time expectation. Whenever we see an impulse, based off a 4-hour time frame, then of course, we don't need to rush things in. There's a good time period where the market will probably need to do some kind of correction before we get it set up and things like that. Okay, so those are quick kind of like updates in terms of the data. Let me talk about the winning trade first, right? And then we'll talk a little bit about the break even, which if you did not shift your stops to break even, you have hit a very nice target, right? Full take profit on gold. But for me, I did actually shift stops to break even before eventually take off. We'll talk a little bit about it, but that's on that trade. And then I have two losing trade over here. Again, I'll talk a little bit about it as to they are actually more aggressive, right? So of course, certain takeaways that we can use is if you are actually more conservative, you would actually avoided this to trade and therefore avoided the losses. Okay. But anyway, you can see again the importance of risk to reward ratio, right? One winning dollar CAD trade easily cover both of that losses. We end up, I would say, a little bit on the profit side, but more or less it's just break even, right? 0.18 hours is really not a lot. But of course, if you manage to also capitalize on gold trade, which I did not, okay, you also manage to, you would be able to get about like 2 point something hours as well, right? Which is really good, right? If you manage to catch them. Okay, so let me talk about the dollar Canadian, right? Let me jump over the chart over here. Now if you remember the whole process of dollar Canadian, it was actually a trade last week. Okay, somewhere around Thursday or Friday, if I'm not wrong. Okay, and the idea is we saw the 3-wave correction, right? Okay, we saw this 3-wave correction. We saw the first impulse move, and we're interested to trade when the market came down. Okay, so we have a clear sense of direction on this trade. Okay, and of course, when we go over to the setup, let me just pull that setup back in. Okay, the setup that I took on the dollar CAD is essentially an order flow setup, right? Not so much on the Elliott wave perspective, because Elliott wave require the structure to come in 3-wave, right? But of course, we did not have that, right? As we're waiting for Elliott wave setup, we have a very clear order flow setup. Okay, so we have impulsive move, we have fair value gap. Obviously, the demand is there. We have some break of structure over here. When the market is pulling back, we use the FIB as a reference point for our entry, right around the 71, and our stop is below. And this trade works out very, very nicely. Okay, now there were a bit of like frustration over here as well if you're kind of like keeping an eye on the market, every other hour. We got in, and then over the weekend we start the week this week, basically some kind of a pullback, right? So some things to take away, right? Sometimes you just need to walk away from your charts and give time for the market to work out, right? Because as this continue to develop correctively, to be honest, the entire trade idea is valid. The entire structure is still valid, right? And for those of you who managed to catch before the news, I also even cover, there is an opportunity to trade the breakout. If you're not in on this trade, you can easily catch the breakout on that with the catalyst from the CPI data potentially coming in, right? So it's a very, very straightforward trade. Not much of a drawdown, right? Very nice little tag into our entry, and then it just went into profit. Psychologically, this is a very easy trade. Okay, that's just a little bit of a challenge when this is pulling back. It's a bit of frustration, but psychologically it shouldn't be tough because there wasn't any much of a drawdown. Okay, so this is the dollar Canadian trade. Okay, let me talk about a gold, right? So over here you can see I have a gold trade, right? Okay, which is break even. Not sure how many of you managed to catch it. Okay, but this trade is also a trade that is very, very clear in terms of structure. Okay, so we have this very clear move down, very corrective structure pullback, and then we get our first impulsive drop, right? And the thought process of this trade, when I was looking at it, essentially is I see a pullback. Okay, but of course on the 4-hour time frame, the direction is clear. We're interested in the downside. As long as market respect this, we got the impulsive break. So the pullback here, we're looking at sell. Right now, this trade here, I'm at Elliott wave entry technique. Right, we're using the Elliott wave entry technique for this. Okay, so this one here, what I was looking at, if I go back to the hourly, okay, the whole thought process of this is we got that impulsive drop, right? And then we got that pullback. But we don't have a very obvious 3-wave pullback. Okay, so what happened there was basically I look at it, alright, the market actually reacted off the 50% mark. Have a little bit of a, potentially a 3-wave, not the cleanest of all. But again, I always stress this, okay? As traders, we are not looking for certainty. We're basically looking for high probability, right? As long as the odds are in favor, I'm more than happy to take it. So I was looking at this. Okay, let me just replay a little bit, right? Back then it was like that. Okay, you guys can always reference to the trade plan to review on this as well. So I was looking at this and I say, okay, if we can get an impulsive break below the structure, that would be a decent trade, right? We have a clear sense of direction. We have a valid setup where the market pull back towards the 50%. We have clear minor low that we can actually use for a breakout trade. And that's basically the thought process I have, right? And of course, the market actually broke out of it. Pretty nice initial reaction. You can see over here, we kind of get a pullback and then the market went back down. And then at this point in time is where I say, all right, let's shift stops to break even, right? Because I really don't like how this is developing at that point in time. Okay, why? Let me talk about that thought process as well. Okay, allow me to replay a little bit, right? Now, back then when I was seeing this, okay, can I hide this? Okay, hide it, right? Now, back then when I was seeing this here, right, why I decided to shift stops to break even is because I'm seeing this drop going down very correctively, okay? And the idea of this is understanding in Elliott wave itself, we have a pattern called expanding, right? So we have an impulsive drop, We have first wave up, we have a corrective move down. This opened up a possibility where the market can actually go back up, break this top to form what we call an expanding flat before the drop. Okay, so I was actually looking at, having that as an idea, right? Having it as a thought process, and I say, right, in the event that really happens, I would want to get out with zero loss, right? So that's why I want to shift stops to break even, right? Obviously, again, every decision we make in trading, there is pros and cons, right? And of course, the con for that decision of shifting stops to break even is we did not manage to catch it because the market actually decided to come back up, tag the break even level before it went. Okay. Now the pro side of it is, okay, this was a decent move to the downside. What if the news came out and actually went up, right? Then you would be having another thought process, right? You'll be saying like, well, luckily I got out and break even. Okay. So as you're doing your trade review, okay, it's important to not only look at it from a perspective of I shouldn't have shift stops to break even, right? But you also want to look at it from the angle that at that point in time, when you make a decision, was it a rational decision or was it just emotionally, right? So what I mean by that is, back then if I was, okay, let me backtrack a little bit, right? Back then when we were here and if let's say my reason to shift stops to break even is simply because I'm afraid of losing, okay? That's not a very rational decision to shift stops, right? Because that becomes the emotional aspect that influence the decision to shift stops. However, if today I say that, all right, okay, I see this as a potential correction move, it's not really going down as I would love it to, and that opens up the possibility of maybe this coming back up first, might be even tagging my stop. And for that reason, I don't want to have risk in the market on this trade. I shift it to break even. That becomes a rational reasoning, okay? So as you're doing your review, you want to look at that. You want to review your trade based on that perspective, right? And not so much in terms of like, oh, I shouldn't have done this or I should have done that, right? Would I have done it again if I'm faced with similar situation? The answer is definitely yes, right? I would definitely shift stops to break even because this is the process that I'm looking at, right? We have a corrective move to downside. This opens up the possibility, and therefore I want to protect the trade. Okay, so I kind of touch a little bit on this here so that you guys can understand. Sometimes in trading it's not picture perfect, right? Okay, and these things happen. Okay, so let me just very quickly take that out again. Right, so if let's say some of you, you decided, again, I always stress this, right, just to remind everyone, the trade plans are not meant to be 100% signal, right? You don't want to just blindly follow whatever I do, but the trade plan always serves as a reference to show you exactly what's the application of the principles, the techniques, the strategy that I use in a real life market environment. Okay, so when I shift my stops to break even, it does not necessarily mean you want to 100% follow, right? Because every trader is different. Okay, so if you guys are able to kind of like I would say did not shift it, right, for whatever reason according to your own plan in terms of managing trades, then this will be a very nice little 2.19 or 2%, 2R trade reward. Okay, yeah, so that's what I want to cover, okay, based on these two trades. Now, let me also quickly touch on the two losing trades. Okay, Aussie dollar, this was actually sometime last week. EuroCAD was this week. Okay, so EuroCAD over here. Now very quickly, I just click into it, right? Okay, the idea of this is definitely a counter trend, right? So that's why it's important to understand and read through the directional bias and context, and don't just jump into the setups immediately whenever I share a trade plan. Okay, again, because this is not meant to be a signal, right? You want to read through this, right? Because you can see I do put in my thought process on here as well, right? Why do I have a directional bias? Because we have a cross structure. Okay, and naturally when I look at a cross structure here on a higher time frame on a H4, we are doing a counter trend. Okay, and counter trend naturally holds a higher risk, right? Or I would say the probability is not as high as the trend continuation direction. Okay, why? Because we are more aggressive in catching an early reversal. Okay, and that's where the counter trend comes in. So obviously, would this trade be as high probability as the gold trade or even the dollar cat trade? Definitely not. Okay, but again, am I willing to take that risk? Yes, right, and that's the reason why I took this. Okay, and end up didn't win. Okay, so this was basically an Elliott wave trade. You can see the crawl. We have a breakout. We had a pretty decent break, to be honest. We have that impulsive move to the upside, but after which, on Monday the market opened and then it kind of pulled back and then we kind of got tagged out, right? So it is what it is, right? So that's a losing one, and of course, Aussie dollar is more or less the same thing. It was aggressive because it's more of a counter trend trade. It's an early sign, right? We look at this as a potential bounce, and then we look into the setup of getting involved. For me, I got involved based on this. Very tight stop as well. It's a 30 pip stop, right? And of course, it hit a stop, and then we'll kind of get out of that trade. Okay, so trade review, right? Maybe it's better to be more conservative sometimes, okay, and not be overly aggressive. But again, the sample size is pretty small, right? I mean, there's just 2 trades. But what happens if, let's say, I take another 2 trades based on counter trend being more aggressive, and that 2 trade resulted in winning? The risk reward could easily cover this, and net make a decent profit as well. Okay. Now, having said that, obviously the S&P 500 trade here that I have is a counter trend. Okay. And of course you can see over here, right? Pretty much just the opposite direction. We have an up move, the first impulsive drop, okay, and that's the part where we're looking at a counter trend, an early sign of a reversal. Okay, so S&P over here, let me jump into the charts right now. Okay, we have this move out, right? So from this low here, you can see it's a significant pullback. So I'm taking this as a new low. After a reset, we have 1, 2, 3, 4, 5. Everything aligns. Okay, if you're following Cramer's tweet, okay, they did talk about S&P, about the U.S. equities market, not doing any significant pullback, sometime here, right? And then of course, if you follow him, you know that whatever they say, the opposite has a very high odds of happening. Okay, and that's where this market came down. Okay, so again, this is more of a counter trend, but we're looking at impulse. If this forms a correction, of course, we're looking at this move towards the 50% mark, right? From an Elliott wave point of view, the pullback often come back towards where wave 4 is, which kind of very nicely align with where the 50% mark as well. Okay, so that's the trade idea, right? That's the direction that I'm going to be focusing on. Now, in terms of Elliott wave setup, we don't really have anything because we want to see a clear 3 wave. We don't have that now, right? Okay, this is really just one wave up. Okay, so ideally we want to see this come down a little bit. Okay, and then make another third move up. Probably the fib here would then need to go towards like 618. Okay, to give us a clear sign of a 3 wave. Then we can look for a sell, right? This is based on the setup on Elliott wave. But if today you look at it from an order flow perspective, okay, then what we have over here is quite clear. Okay, as the market came down, okay, as the market came down, you can see here we have a couple of fair value gaps, right? We have a very obvious break of all this structure over here as well. So, it's very clear in the setup, the market momentum is to the downside, right? So what I do then is essentially just put in the fib, right? Taking from this high here to this low, and then if we can get a market pull back to 71, we ideally want to see some kind of a rejection and the market to move towards our target, in the shortest time possible, right? In other words, we want this to come down impulsive. Okay, so this is the setup that I have for S&P 500. Okay, and then the other one is on Litecoin, right? So very, very quickly touch on that as well. Litecoin over here is a little bit of a, potentially you can call it a trend continuation. At the same time, you can also label this as a counter trend. So that's why I put it here. We don't really have a clear trend direction at the moment. Okay, the reason of this is because you can see, right, the impulse is down. This is definitely corrective, right? WXY to the upside. And then we have a first impulsive drop. Okay. Now, why I say there's really no clear sense of trend is because technically this is seen to be moving higher as well. It can be an uptrend. This 3 wave to the downside may have also potentially completed that structure. And then of course, if you take from this low to this top, that's an up move, right? So it's not as clear. Okay, so this is a little bit more of like, you can say we're trading the internal waves of potentially in a range bound environment. Okay, so is it still worth considering? As long as you're willing to take the risk and the reward is sufficient, that to me is something that I'm okay with, right? I'm able to look at it from the angle. So let's very quickly look at Litecoin, right? So Litecoin over here, we're looking at it from a, okay, let me just jump over to the higher time frame first. Okay, so Litecoin, this is the setup, right? Sorry, this is the direction that we have. Okay, impulsive drop. So if you can get a corrective move, you're expecting this to come down and retest the low here. Okay, so that's the direction. I'm interested in more of a sell side. And then we go down to the hourly. That's where on the order flow strategy we have a setup. Okay, we have the market breaking structure. Okay, we have fair value gaps and therefore demand area as well. So we take the FIPS, and again, if the market actually continue to go higher, ideally we want to see a nice little rejection and the market to move towards our target in the shortest time possible. Okay, again, it's very repetitive, right? Because once you understand the framework and you're able to apply it, it's more or less the same thing every time. We look at the direction. Do we have a clear sense of which bias that we want to focus on? In terms of context, is it worthwhile? Do we have extra alignment? And then we simply look for the setup that we want. Okay, if there's a setup, we can look for a trade. If there's no setup, we don't look for the trade. Okay, so those are the few things that we have. Again, the market isn't very volatile this few days, except for yesterday. So a lot of things here will probably need to be patient. Okay, now very quickly, just now I mentioned the pound CPI actually opens up some possible trade for us, right? Namely the pound yen, as well as the pound Australia. Looking at things here, I think the pound yen may not be the best. This little drop from a forward time frame hasn't really break any structure yet, right? So not as clean as the pound out, right? Now pound out here, why I say it opens up the possibility of a trade, right? Because before today's pound CPI, okay, this was what we had in the morning. Very nice 5-wave sprawl structure, right? So we kind of have it here as well. So the idea is we want to wait for a confirmation, right? Hitting the FIP, hitting the top of the trend line doesn't necessarily mean you want to sell it, okay? But if today aligning with the FIP, aligning with the trend line, and if we can get an impulsive rejection, kind of like a V-shaped formation, then that gives me that extra confirmation, right? So those are a little bit on the context perspective of things. Okay, and of course we managed to get it, which is nice, right? So we kind of get an impulsive V shape, and moving forward, right? So this is where tomorrow I'll be updating this, potentially going into bearish. Okay, and what we'll be looking out for, of course, is we want to ideally see some kind of a corrective pullback. Okay, and we can start to look for downside, right? So downside over here, first one to look out for, okay, first level to look out for would naturally be this swing low, right, around 1.9182. Of course, we can also look at the entire swing leg of FIP, okay, from low to high, and if we take in a 50% mark around 1.9060, that would be also another area to look out for. Okay, so of course that builds a very solid bias. Okay, and of course, if we bring it down to the lower time frame, from an order flow perspective, definitely there's fair value gaps, right? Because that's a very strong momentum push. Okay, so what will happen over here is we'll see this as a a supply zone, right? And then of course we have a little bit of a break of this structure here. Okay, and right now it may be a little bit too early to pull in the FIPS, right? Because this low here may not be fully established. The idea is if the market continue to drop a little bit before the pullback, then this would be the new low that we need to reference the FIP. Okay. So sometimes I don't want to pull FIP too early because I understand that, if this is gonna go up, we have sufficient time to prep the trade, right? There's no need to rush things through. Okay. But of course, by tomorrow morning, I think, from now until tomorrow morning, we have like a good 12 hours or so, right? So on the hourly, we have 12 candles. It's more than enough to determine whether this is going to be the low, okay? But that's going to open up the potential trade on the pound Australia, okay? Pound yen, not so much, because again, as I mentioned, not so nice in terms of rejection. It's not really huge, right? But pound dollar here would potentially shift things a little bit, right? Okay, so how would this shift things? I'll probably not look at it from a deeper pullback right now. But I'll more or less, if of course this continue to bounce a little bit to the upside, then I'll start to look at it from an angle where, okay, this can potentially play out into a three-wave pullback. Right, it's still an early sign, but as I mentioned, if this continue to go higher like that, right, that would be a three-wave sign, and then three-wave move to the upside, then we'll look for sell up there. Okay, yeah, so we'll see how it goes, right? And of course, if I bring this back in, that would also align very much in the bigger perspective. Okay, yeah, so I'll, again, as usual, right, we'll keep you guys updated as the market continue to evolve. Good. Generally, that's what I have from my side. Okay, one thing to just point out as well, right? Especially when the market, okay, hits the target or even the key area that we're looking at, right? Oftentimes, I don't want to just jump into a trade, right? So obviously, initially we're looking at the sell. When it hits a target, you don't want to be selling it anymore. But it doesn't necessarily translate to a buy, right? Because for me to look at a buy, I need to first see a confirmation of a bounce, okay? Or at least some kind of a crawl structure here. And then, of course, we'll take this, opens up the aggressive entry technique for the upside, right? Which is where the EuroCAD came in, right? And, of course, that trade resulted in the losing one, okay? Yeah, but this one here, we just be patient on it right now, right? So nothing much on the Euro-Canadian. Okay, good. So let me see if you guys have any question. I think I see a couple of questions being sent in, right? Yeah, so Edward asks, can we look at GA pound Australia sell at 1.950? Okay. Yeah, okay. So I think I went through my thought process, but I think you managed to catch it really at the top. Okay, that's like super neat. So that's valid, right? As long as it fulfills your strategy. Okay, definitely very aggressive. If you're looking at this as a crawl, okay, 5-wave internal, and you're looking to kind of execute a trade out there, definitely more aggressive than I am. Okay, but I think it's a valid trade, right? And definitely with that impulsive move, it's a very solid opportunity for you to shift stops to break even. Okay, the reason is because, okay, so when I shift stops to break even again, it shouldn't be an emotional strategy. It shouldn't be an emotional decision, right? It shouldn't be, oh, I don't want to lose, therefore I shift stops to break, right? It should be a decision result from a proper thought process so that it becomes repetitive. It becomes a consistent process. Okay. Now, what I mean by that is, if today you enter a trade around 1.95, right, which is very, very close to that top there, okay, what you're looking at is currently the market is trading around, let's say, 1.9380. Okay, that's like 120 pips away from your entry, right? So do a little bit of visualization. Okay, now suppose you sold there, the market is here. If you don't shift stops to break even, and the market just decides to now V-shape go back up, okay, what are the odds of this coming back down? Very, very low, right? It's not something that's high probability anymore, right? Because after an impulsive drop, if it goes back up impulsively, then the odds of it coming back down reduced significantly. Okay, so for that reason, I would want to shift stops to break even, because if it really decides to V-shape back up, I don't want to be in this sell anymore, right? I would gladly take the break even and look for the next opportunity. Okay, so that's the thought process as to why I think it makes sense to shift stops to break even now. Okay, because this is a momentum drop. If this goes back up, you probably don't want to be in the trade anymore. Okay, now it may do some kind of a like correction and pullback, whatever it is, but I think because you managed to enter at a very nice little spot at the top, any correction should give you ample room to still hold on to the trade even if your shift stops to break even. Okay, so that's the thought process behind it. Right. So yeah, you mentioned about the Bank of England speech later today, right? Yeah, so that explains as well, right? I mean, if you have a upcoming news, okay, and if the speech actually resulted in a V shape, you probably want to get out anyway, right? Yeah, so that's the part on power trading. Yeah. Yeah, so I think yeah, just shift your stops to break even, and then there's no risk. Then you really don't need to care about his speech coming in anymore. Okay. Good. So I see another question over here as well. From Shaquille. Would as a swing trader, would you suggest to only look at the charts every 8 hours for less anxiety, FOMO, basically psychological improvement? The answer is yes, right? But again, it's not that. Okay, to give you a perspective, right? If you don't look at the chart, but then you are. Okay, what I mean is you don't look at the chart, but you can still feel anxious. You can still feel FOMO and things like that, right? And then at the end of the day, you still end up looking at the chart. Okay, looking at the chart doesn't solve your trading psychology. Okay, looking at the chart, or I say, getting away from the chart doesn't solve your trading psychology, right? Because what can also happen is you don't look at the chart, but you're constantly thinking about it. Okay, and then what's the end result? You still open up your app, you still look at the chart. Okay, so to get rid of FOMO, to get rid of anxiety, and to kind of tackle psychological aspect in trading, it's not something that's easily solved, right? Because it's really within us as an individual. Okay, and everyone is different to a certain extent, right? I always I shared this before, right? It's not gonna be a one size fit all thing. Okay, but let me open up an empty chart first. Okay. Now, it's not going to be a one-size-fit-all solution, but I always share that there's this framework that can actually help you gain clarity in managing your psychology, understanding your psychology a little better. Okay, and the magic keyword is why. Okay. So for example, okay, let me take a look. Okay, for example, if today you say I'm facing FOMO. Okay, so that's the first stage, right? You identify a challenge. Okay, you identify something that you would like to focus to solve it, right? FOMO, for those of you who are not familiar with, it basically stands for fear of missing out, right? So naturally, based on the why framework, right, you ask yourself this question: why am I having FOMO? Okay, I mean, you would have your own answer. Everyone will be different. Okay, so your FOMO here can be, you want to be as brutally honest to yourself as possible, right? Sometimes it's not money related. Sometimes it's money related. For example, I give you some context, right? If today you are feeling FOMO because of money related, means that I need to make XX amount of money to pay the bills. Okay, then that is actually a money related FOMO, right? Because you're actually putting yourself, you're in a place where you are pressured to actually earn a certain amount of money from the market to survive. Okay, so once you identify this, right, you actually start to gain clarity, right? So if you want to go deeper, okay, of course, in each level as you go, you can actually gain some insights and potentially even solve it, right? So then you want to look at it. Okay, if suddenly you realize that, oh, I'm having this FOMO because I'm in an environment, I'm having a pressure to actually make a certain target to pay off the bills, then maybe to resolve that FOMO from trading is to find alternative ways that is more certain to gain that XX amount of money. Okay, why? Because trading itself, you won't have that certainty, right? You won't have like, oh, I spent 8 hours with the market doesn't mean you're gonna earn 8 hours of pay, right? But there are certain alternative methods where you exchange certain amount of your time, your effort, you will guarantee get certain amount of money in return. Okay, for example, like if you work a part-time job, right, it's more or less certain you're gonna get paid if you do your job well. Okay, so then your solution, if you realize that, oh, this is really affecting your trading, you're not performing in a peak in your trading because of this FOMO, then the way to solve it is remove this, right? And how do you solve this? You need alternative source of income to actually solve this first. Okay, once this is removed, you probably will not have that FOMO. Okay, so of course you want to go deeper as well, right? Like why do I? So you have this clarity. You can either solve it in this level, or you can go deeper. Okay, like you keep asking why, right? So why do I need the XX amount of money, etc., right, to pay the bills and things like that? So you might be finding ways and say that, okay, maybe because I'm spending too much on certain aspect or certain areas of things, right? Okay, certain aspect. Okay, that's again gaining clarity, right? So the framework of why, actually, the deeper the level you go, the more you actually dig out, right? For yourself. Okay. So again, there's no one size fit all. It's really because everyone have a very different answer as to their why. Okay. It's not a simple process, but it's a very important process because in the past, like back in the year when I was in uni, I actually went and took a coaching program, right? Not really to coach someone else, but to coach ourselves, right? And it's more of like a self-discovery process, and we went through a lot of different activities, a lot of different processes, and it really helps, right? So I'm just sharing with you some of the methods that work for me very well. Okay, and one of the things is to keep questioning why, right? Why do you want this? Why are you feeling that? Why do you have this thought process and things like that? The deeper you go, the more clarity you're gonna get. Okay, so your FOMO here, right, can be non-money related, right? Just as I mentioned, it can be monetary related, it can be non-monetary related. Your FOMO can be, maybe it's more of an ego thing, right? Okay, or ego means pride, right? So it's more of like, maybe I'm in a friends community or whatever community that others are making more than me. Okay, so it's not really a money thing, but as you have this answer, you start to gain that clarity. It's actually more of a pride issue, right? It's an ego thing. Like everyone's making so much, how come am I not? And then therefore I'm being FOMO, right? Because I want to find out the next opportunity that I can make as much or if not more. Okay. So of course the same process applies, right? You can then solve this as it is, right? You can actually solve it at this level. How to actually get yourself out of this situation. Okay, change the environment and therefore change your psychology as well. Or you can start to ask a little bit more, right? Like, why will I feel it this way, right? So same thing here, right? I just want to give you some examples on how to work on this framework. Okay. Hopefully that helps, right? Because you can actually apply this in everything beyond trading as well. Okay. It works very well on emotions. Okay. It's always the process of first identify. Okay. So a little bit on the emotional aspect and management aspect, right? You always first identify. Okay, identify meaning you need to first acknowledge, okay, that you're facing certain emotions, right? Because if you're you're actually not acknowledging it. Okay, like it's so obvious. For example, if it's so obvious you are angry and then you keep saying no, I'm not angry, you're in a denial state. When you are in a denial state, you will not solve anything. Okay, so your first step is always acknowledgement, right? You need to, of course, first identify, oh yes, I'm being angry, I'm feeling very angry now, and then you start to acknowledge it, right? Now once you start to acknowledge it, that's where you're able to then move on to the next step, which is basically to find clarity out of it. Okay, which is basically a process of what I've just described just now, right? To find out like why, what causes this, what got triggered. Okay, maybe certain things happen, and therefore you feel certain way, right? That's the clarification process, right? And then of course the third step over here is to solve it. Okay, so if you don't acknowledge, you won't be able to find clarity out of things, and then you won't be able to solve it because it's a very natural process, right? You need to first know what you want to solve, okay? Accept the fact that, yeah, that's some problem, that's an issue you want to tackle. Then you go and find the clarity in it, right? And after that, you find the ways to solve it. Okay, so that's how I work it out, right? So again, would we entirely feel nothing? No, right? As I mentioned, this trade on gold, do I feel frustrated? Yes. Would I be greatly affected by it? No. Okay, because the steps I do explain to you is very very straightforward, right? I identify, yeah, I'm frustrated on this, but I've already accepted the fact that it's part of trading. Okay, and already accepted the fact that why I actually shift stops to break even and things like that. So I've actually went through that in the past so that when I face similar things again in the future like this, we can manage it very very easily. Okay, and we all got hung up with it for so long, right? I won't be like FOMO, I want to sell this again because I missed that and things like that, right? So it's a process. It's not an overnight thing. And it's a very very conscious thing that you need to keep practicing, right? So that's something I think is very important to everyone who is trading, right? Because that's really the psychological aspect, and the better you are in managing your psychology and emotions in trading, the more important it is to contribute to your success, right? So I think that's something to know. Okay. Um. Good. Okay. I think A here asks, can we look at pound dollar, right? Yeah. So I think I explained a little bit just now in terms of pound dollar. Right now this would be my primary view. Okay. So of course the bias here would probably need to shift a little bit. Yeah, I'll probably just shift this to neutral right now. And I would say we want to see how the market is going to react off this first. Okay. Right now I'm seeing that if this actually decides to go up correctively, that would complete the parent of a inner WXY here. Okay. And if that's the case, we're definitely looking for the sell, right? On the high time frame on the daily, okay, it's valid that if this continues to come down a little bit more, because this overall can still be correcting this move. Okay, that's my take on it, right? But of course, the prerequisite is we want to see the market start going higher. Okay, there is no reason to buy now. Okay, unless you see a minute impulsive move here, and then we see a correction, and we say, okay, let's take it a short-term trade to the upside. That may be a valid short-term trade, but we need to first wait for this impulse correction, right? If you don't get that, then there's no buy. There's no sell either, right? You don't want to be selling there. So scenario playing, okay? If the market actually develops correctively here, would I consider a sell trade? The answer is no. Okay, we have a valid pattern of an impulse correction, but the context tells me better not to sell because at least from here, what is the downside that we have? Not much. Okay, I mean, can it break through? Yes, but would the odds of it breaking through be very very high? Probably not, right? So again, in terms of context, selling near a support area, okay, with so many other confluences, may not be the best thing to do. Right, so that's my take on the pound dollar. Okay, potentially this would just need more time, right? I don't think this is something that I'll be spending too much time focusing on that trade within this week. Okay, because for this to develop, it needs time. Okay, so probably it's gonna take some time before it completes that. Kenya. Good. Cool. Any other questions so far? Any other questions that you guys would have? All good? Hey, good. Yeah, so I think other than that, there's really nothing much happening in the market at the moment. Okay, so as I mentioned, right, I mainly have two potential pending orders right now. One is essentially the S&P. Okay, getting close to our entry, we'll keep track of that, and the other one is basically Litecoin, right? Okay, Litecoin may take some time, right, because this will probably need to come down and go back up. Okay, right. Okay, two questions I see over here. Marcus asked how to enter trades for crypto. Okay, so I kind of highlighted this before as well, right? If you're interested in trading crypto, don't trade on MT4, right? Because MT4, the spread is just not worth trading on it. Okay, and then of course you have swap and things like that on MT4, right? It's very expensive. It's not worth the effort. So what you want to do if you're interested in crypto is always have a specific crypto exchange account. Okay. Now, I'm not in a position to recommend you any broker for crypto because the space in the crypto and the brokers in the crypto space is still considered more of a high risk. Okay. It's very. I mean, in the FX market, there are also brokers that are, not as regulated. But in the FX market, it is more transparent, right? I mean, you can easily differentiate what is a good broker and what's not a good broker. But in the crypto market, because it's not a regulated industry, at least for now, it's still not fully regulated. It's quite challenging, okay, to identify. I can only share with you which one I'm using, but I'm in no position to recommend you to just use it, okay? And of course, depending on where you are located as well, some of this exchange may not accept client from certain countries, okay? So I have two accounts on crypto, right? One of it is Binance, okay, which I think everyone would know Binance. To me, that's like the grandfather in the crypto space, right? If Binance collapse, there's a very good chance the entire crypto market will be shaken. So to me, that's like naturally the quote unquote the safest, right? Binance. The other one I'm using is called CoinW. Okay, CoinW. So again, let me just bring you to the website if possible. Okay, it's just coinw.com. Go and do your due diligence. Understand whether this fits into your, you know, what you're okay with, what you like, and things like that, right? Yeah. So to me, I'm using this too. Okay. There are definitely more crypto exchange out there. So I think as long as you do your check, you're comfortable with it, then that will be fine. Okay. Yeah. So to answer Marcus' question, sorry, I clicked the wrong thing. Okay. Yeah. To answer Marcus' question, Yeah, that would be Binance. Okay, I think Marcus says living in Singapore. So I think Singapore right now you can't really use Binance. So in Singapore, I'm not sure CoinW is okay or not. You can check it out. If I'm not mistaken, you can also consider BGAT. There's such a thing. I think I kind of heard of it before. Yeah, BitGat, right? BIT, GT. I'm not sure if you can use this in Singapore, but this is another crypto exchange that you can look into as well. Right, so that's on the crypto space. Shakil asked any investment opportunities. I think in terms of investment, definitely there are always available opportunities to look into. One of it that you may consider looking in for the long run, depending on again which space, which industry you're looking at, right? I think I mentioned sometime last year about Mexican market. Okay, so that's gonna be the ETF EWW. Okay, you can definitely consider this, right? So you can see again breaking all-time high. In terms of investment opportunity, this may come back down, complete a three-wave structure, and then potentially continue higher. So that's on the Mexican market, right? Emerging markets you can consider looking into. In terms of the commodity space, uranium is definitely one. Of course, beyond uranium, gold is another very solid investment commodity. Okay. If you're looking at specific stocks, then there are a couple, right? So you can definitely look into some of the dividend stocks over here. I do have a lot, right? But of course, not all of them you just want to invest into. Yeah, but there are few, right? I mean, is stock market is unlike FX, right? FX we have limited focus, right? It's easier to focus, but stocks is just basically so many out there. Okay, so you want to start off first by looking at which industry you're interested in, right? Is it tech? Is it like Nvidia recently made headlines, right? Okay, is it technology? Is it AI related? Are you looking to diversify beyond the US and therefore you're looking at maybe the Mexico market, emerging markets, right? Are you looking at commodity space, things like that, right? So you need to go macro, okay? So top down approach for stocks. That's usually how I do it. Okay. Dave asked, do you change trading view charts to adjusted for stocks? Yeah, I think that's what you mentioned here, right? For me, I always use this. Okay, I'm not sure what this actually changed though. Okay, for stock chart, I always use a log chart. Okay, this is important because if you don't use a log chart, right? So let me just show you because this is quite an exponential move. Okay, if you change to a regular chart, this is not this is not a huge difference. But let me jump to S&P. Okay, now it wouldn't affect the price. It just affect your visual cue. Okay, why is because the stock market is exponential, right? You can see exponential move. Okay, so if you don't use a log chart, sometimes the visual can be quite confusing. It can be quite hard to actually do your analysis. So I always like to change it to a log chart, right? You can see there's a very obvious difference in the visual cue, right? This is exponential in move, okay? And then if you change it to the log chart, it's a bit more linear. Now it doesn't change the chart price. Okay, the pricing is exactly the same. It's just it changed the representation of the visual. Okay. Yeah, so for me, I just keep it the same for stocks, for FX, for commodities. I just like my chart everything in log. And not sure if that's what you meant by adjusted, right? Oh, okay. You say here adjusted due to dividend. I would say you probably don't need to do that adjustment. Okay, because if today you're trading the price of a stock, okay, you're trading whatever it is. You don't want to have it adjusted. Okay, because at the market, you want to if you're trading it, right, you're trading the price at market anyway. Okay. So when you're doing an analysis, you don't want to do it in in terms of adjusted as well, right? So for example, if you go to NVIDIA again, okay, you want to trade it as it is, right? Based on whatever the market price is. Okay, so that's my personal take. If you're trading that, I don't think you want to be adjusting the chart for that. Okay, just trade as it is based on the market price. Okay. Shaki asks, do you have difficulties with the Torex app? Not from my side though, because for me, to be honest, I don't log into a lot of all this brokers app frequently. The most I use is MT4, MT5. Okay, yeah, so hopefully that cover. If you have difficulties with any of the app, feel free to directly contact them. Okay, I have actually also dropped the contact person if you are interested in, okay, in Discord, right? So you can actually track that out. Okay, that's let me just direct you over there. Yeah, so if you go over to Discord, you scroll under resources, right? You can see I've actually put in some info there. So if you're interested in if you need any support, right, you can actually WhatsApp directly. They'll be more than able to help you as well. Okay, Marcus asks, how about CFD ETF index? Applying the Elliott wave or order flow. I would say any charts that you can access to, the principle of Elliott wave and order flow is the same. You can actually apply that. Okay, so let's pick an the video here is just basically an impulse move, right? So if you, let's say we pick an example of chart here, right? Let's say Apple. Okay, the same principle can be applied, right? Obviously, this is doing a little bit of a pullback. Okay, so the same thing about FIPS. Basically, you are looking at chart, right? It doesn't matter what instrument you're looking at. It's more or less the same, right? We have an impulse move. We have a correction here happening. So we're looking at a little bit more to the downside and then a bounce, right? To complete the three-way structure in Apple. Okay. So the same principle apply. Okay. Whether you are trading against CFDs, ETF, index, the principle of technical analysis is the same. Okay, you can apply them. The only thing you want to avoid is non-liquid, non-volatile asset, right? So for example, if you're based in Singapore, I would not recommend you to use the technical analysis that we cover over here on the Singapore local stock market. Okay, it's not very effective. Same thing here in Malaysia, right? We don't do that. But of course, if you're looking at very liquid, very volatile asset in the US, it's doable. Okay. Bonds are not tradable instrument. Not true. Bonds you can trade it as well. It's just that we don't really trade bonds. Most of the time, it's more towards investment, right? But there are people who trade bond prices, right? But they do it via options more than prices, because prices of bond market is not as volatile. Okay, but what they do is they trade the options on bond. Okay, it's gonna be more complex when you go into options derivative, which I don't personally do anyway. Okay, yeah, so bonds are tradable, but most of the time I know is traders use options to do bonds market. Yeah, Everett says Palantir, right? I know recently, again, very nice little impulsive move. Okay, so again, when you want to apply order flow, right, it's a very obvious thing here is this is a fair value gap. Okay, so you can also apply that principle here, you know, putting in your FIB, swing high to swing low. Okay, if Palantir can give you a decent pullback towards the 71, you can potentially look for the buy as well. Right? Yeah, so the principle of technical analysis can be applied on any charts, right? But of course, on a high time frame perspective, if you zoom out a little bit, just be a little bit of caution, be a little bit careful, because this may actually present yourself as a little bit of a crawl, right? So again, that pullback here, again coming back to a 71, coming down here, that is quite doable. Yeah. Okay, so I hope that clarifies things a little bit for everyone. Okay, yeah. So hopefully it's clear. Right. So good. That's all from me. If all is good. Okay. So let's see how the market continue to develop for this week. Okay, and then as usual, we'll just keep you guys updated along the way. Alright, so see you guys next week. We'll end off today's session over here. Okay, good night and see you guys. Bye bye.